Welcome to Mrs. Royce's Accounting Lecture Series. This lecture is based on the application problem of Bethany Hartman. She is starting Hartman's Lawn Service and is a small service business. She uses the counts shown in the following equation. What we are going to do is we are going to analyze each of the transactions down here, determine which accounts in the accounting equation are affected. Then we're going to write the appropriate columns using the plus or minus sign to show where the account increases or decreases, and then calculate the new balance for each transaction in the accounting equation. The first transaction, shown by number 1, was done on June 1st. Received cash from the owner as an investment for $5,000. As we've done in the past, we're going to analyze the transaction. The first thing we need to do is put in the date, June 1st. Transaction number 1. Reading it, received cash means what? Was cash received? Did it come in or did it go out? Yes, you're right, it comes in. So in the asset column, under cash, we're showing that $5,000 worth of cash came in. And then, to balance out the equation, we're showing that $5,000 goes into the equity or capital account for the owner to show the investment. Now, as we've been doing in class, we always want to do a new balance after every transaction. This is so we can always have up-to-date information for the owner. So if the owner comes to and says, "How much cash do I have?" we can go to the cash account and say, "You've still got $5,000. So in looking at this, the new balance for cash is $5,000, and the equity account balance is also $5,000. Let's move on to the second transaction, which the second transaction is June 3rd. I'm just going to type the 3rd. We're using the same page, so we're keeping June. We know these are all in June. Transaction number 2. What does the transaction say? Paid cash for insurance. Again, what two accounts are affected? You've got your insurance, because you purchased it, and your cash. So you would put, we purchased $1,800 worth of insurance, so our insurance goes up. Since we paid for it in cash, our cash account goes down by the $1,800. Now we must do the new balance so that Ms. Hartman always knows how much money she has. So you take the $5,000 minus the $1,800 that we spent, and you will have $3,200. And it shows that we have the asset of $1,800 worth of insurance. We still have the positive balance in the capital account or the equity account of $5,000. To see if this still balances, you take the $3,200 plus the $1,800, and does that equal $5,000? Yes, it does. So we're in balance. Now we can move on to the next transaction. The next transaction is on June 5th. Put the 5th there. The third transaction. And what that says is it bought supplies on account from Hartman Mowing. So we have to tell us, what does this say? What accounts are affected? We bought supplies. So the plus part of it is we bought supplies for $700. Now we purchased them on account. Can you tell me what on account means? Yes, we've been given credit by Hartman Mowing. So that is a liability, something that we need to pay later. As you can see here, we have an accounts payable for Hartman Mowing, and we will increase that because we owe them the money. Remember, if we increase an asset, and that's the only part of the equation we're affecting, we have to increase something on this side of the accounting equation. Now, once again, we have to do our new balances, so we can always tell the owner where we are. We bring down the $3,200 in cash. We now have $700 worth of supplies. We still have $1,800 worth of insurance. But now we have the $700 in accounts payable, the amount that we owe, plus we're bringing down the capital. Now let's see if we balance. How are we going to do that, ladies and gentlemen? We're going to add all of our assets together. Take the $3,200 from the cash account, $700 from the supplies account, $1,800 from the prepaid insurance account, and that's $5,700. Do assets equal liabilities? Yes, it does. Perfect. We get to move on. Perfect. Now our next transaction is June 10th. Transaction number 4. And why don't you read it to yourself? Perfect. What it says is we bought supplies on account from Knapp Company. So the first thing that happened is we know that we have what account affected. We bought supplies for $200. Supplies are going to increase. Then, again, on account means that we pay later. Accounts payable. Pay the account later. This is Knapp Company, so we're going to increase the liability side of the equation by $200. Now what's the next step? Perfect. We rebalance. Bring down the balance in cash. That was not affected. Now we have more supplies. So we have to add the $700 plus the $200 that we just purchased to give us $900 in supplies. We still have the $1,800 in prepaid insurance, but now we owe Knapp Company. We still owe Hickman Mowing because we have not paid them, and now, of course, we still have our capital. So let's see if our sides of the account balance. Tell me how we're going to balance it. What are we going to add? Yes, we're going to add our assets to see if they equal the liabilities. So let's take our $3,200 in cash, $900 in supplies, $1,800 in prepaid insurance. That amount is $5,900. Does that equal the liabilities plus equity? Let's find out. $5,000 in equity, $700 to Hickman Mowing, $200 to Knapp Company equals $5,900. We balance. Perfect. Let's keep going. Okay, so now we're looking at June 15th, which is transaction number 5. And what it says is paid cash on account to Hickman Mowing. Which two accounts are affected? Yes, cash because we're paying cash out, and Hickman Mowing because we're paying on something that we've charged earlier. So if we paid cash on account, are we going to add cash or subtract cash? Perfect. We're going to take $300 because we paid it. $300 to Hickman Mowing. Now, since we took it out of there and we have to balance Hickman Mowing, we're going to subtract that from this side of the equation also. Now what's our next step? Yep, you've got it. We have got to balance ourselves out. So we take our balance of $3,200 minus the $300 we paid. So if Miss Hartman asks us how much money she has today, we can say right now you have $2,900. You still own $900 in supplies. You still have $1,800 in prepaid insurance. Is this making sense so far? And these are all positive balances. Now, we still owe the $200 for Knapp. But now we have to look at Hickman Mowing. Before the new balance was $700. This, on the 15th, we paid $300 on the account, so we subtract. 7 minus $300 is how much? Exactly. We still have a $400 plus balance, and then our balance in our capital account has remained the same. So let's see if we balance. We're going to take the new balance line and we're going to add up our assets. 2,900, 900, 1,800, 5,600. Now, does this, our liabilities and owner's equity, equal 5,600? Let's find out. 5,000 plus 400 plus 200 equals 5,600. Yes, it does. So these are the totals for these accounts. Now what I'm going to do is I'm going to move these down so we can remember them when we go forward onto the next sheet. Now we look at the next transaction. The next transaction is going to be transaction number 6. That was on June 17th. Since we've started a new sheet, let's do June 17th. We're doing transaction number 6, and let's read what it says. Paid cash for supplies, $100. What two accounts are affected? Yes, supplies and cash. So we got supplies in, $100. And how did we pay for those? Did we pay for them this time? We did. So we're going to subtract that money out of the cash. Now, let's again do a new balance. 2,900 minus 100 is 2,800. Now we have $1,000 worth of supplies. We still have the 1,800 insurance. See, there's nothing to add there. We still owe Knapp. We still owe Hickman. And we still have the $5,000 in capital. So we're doing good so far. Do our assets, again, equal our liabilities plus owner's equity? 2,800 in cash. What amount did you come up with here? What did you get for your balance? Does it balance? Hopefully you came up with this number, 5,600. Now let's look at our next date for transaction number 7. Transaction number 7 is June 19th. Transaction number 7. What does the transaction say? Paid cash on account to Knapp. So what two accounts are affected? Knapp and cash. Exactly. We paid cash and we paid account on Knapp. Now, do we do a new balance to see if we balance? Yes. We take this balance minus what we spent. So right now, our customer has $2,700 in cash. This didn't have anything, so you just bring your balance down. Is it a positive balance? Yes, it is. Anything happen here? Bring it down. Now what happened here? We had a $200 balance here. We paid $100, so how much is still in balance? Yes, we still owe the $100. Nothing happened here. Bring it down. And again, owner's equity was not affected. Now I want you to see if this balances. Please balance it. I'm going to do it, and then you make sure it balances, and I'm not going to tell you. Now we will do the last transaction, the 25th, transaction number 8. And this is interesting. It says received cash from owner as an investment. So analyze this for me. What happened? What of two accounts are affected? Received cash means we got cash in from the owner. She decided to put more money into her business. So what other account is affected? Exactly. Owner's equity or capital. Now we do a new balance. And then we will see if we balance. So the new balance in cash is this amount plus this amount, and that equals, nothing changed here, so we bring down the 1,000. Nothing changed here, so we bring down the prepaid insurance. We still owe Knapp Company. We still owe Hickman. See, nothing had changed here. But now we have an increase here, so we add these two numbers together and come up with this. Now, do we balance? If we balance assets, liabilities, owner's equity, let's find out. This total here is $6,500. You are in balance. Congratulations. If you have any questions, see me.